Very pleased to say I'm joined by Nick McLaughlin from our multi-asset team. Nick, one of the questions that we get from investors currently is around the outlook for Japanese stock market. So do you think we should stay invested in the Japanese stock market for the second half of the year?
Yeah, so Japanese equities have been one of the standout performers in global equity markets over the last few years. They've benefited a lot from resilience in US growth, and their export market has also been supported by a weaker currency. A weaker yen has helped a lot the export picture for Japanese corporates. They've also seen a return in sentiment, and international investors have come back to the market, helping the market reach all-time highs in Q1 of this year. That recovers the drawdown that we saw from the late 1980s stock market bubble bursting. Going forward, however, the yen weakness, if anything, if it continues, is more likely to be a headwind than a tailwind from this juncture. But the baseline forecast isn't for much more material yen weakness. Instead, what we see as the next leg for Japanese equities is around corporate governance reforms. We've seen announcements from the Tokyo Stock Exchange aiming to improve shareholder returns. That comes in the form of increased profitability targets for companies. We've seen improvements in payouts in the forms of buybacks and dividends, divestments in cross-shareholdings from the different groups. And this has begun to form a virtuous cycle within the market. We've begun to see the market reward these type of announcements. I think this can be a key leg for Japanese performance into the second half of this year.
Brilliant. Nick, thanks for that great analysis.